Hello, this is Chris from tradesight. This is a market preview for Friday, June 21st, 2013. I'm going to keep this pretty simple. Here's a look at the S&P daily chart. We've been watching this for a while now, and we've fulfilled many of the aspects that we were targeting on this. So let's take a look. First of all, this trend line goes back to November. It actually bounces off a couple of points you can't see here on the chart. And we tried once to break it in April. We didn't get the construction you need to get a confirmed break, and actually bounced off of it and accelerated a bit in May. And then came back here in June. Early in June, we tried to break below it, got right back above it very quick, and that was after a little hesitation for a couple of days right on the line, basically. And then we did roll under it again. It was just over a week ago that we got the confirmed, which means we got to close underneath it and then move lower the next day, a good consistent move lower. That's sort of your confirmed break. What you need to do then, as we've been discussing and trying to walk through each time this has almost happened, is you need to rally back up at some point, retest the line, and fail. Once you do that, the next rollover usually is the beginning, and I quote this, the beginning of the downtrend. And a lot of times, once that confirmation occurs, remember, things tend to fall quicker than they rise, so you can get sort of a fast break in the market here. Now, there's a lot of things that we need to point out about this. First of all, our target on the break was this red static trend line off the 9-bar move setup right here, and we got all the way down to that today. That's pretty significant to hit that level already. So this is a big confirmed move. It started with the Fed comments the other day that spooked the market a bit in the last 2 hours on Wednesday, and then we gapped down Thursday morning and headed even lower. Let's focus on the intraday action here on the ES. This is the S&P minis, and you can see first of all, this was the market trading. These are just stock market hours trading very flat Wednesday ahead of the Fed, and then the Fed comes out at 2 p.m. Eastern time, makes their comments, and we got a little sell-off. And that actually brought us back to a number that we've been repeating over and over because we keep hitting it on the ES over the last month or two, which is 1625. We basically closed right at that level. But then the rest of the world sold off overnight. We gapped down significantly on Thursday morning. One little tiny attempt to move up above the opening level failed immediately, and the rest of the day was flat, including, and this is important, once you get into a downtrend mode, especially at the beginning stages of it, you're going to see the funds doing a lot of selling in the afternoons, and that's what we got here. Was in the last 2 hours play, they come back from lunch. We watch this point every day. What happens at 2 p.m. Eastern time? Does the volume start to pick up, and do we get a direction? We got a very clear direction, and we made a lot of money today on the short side of the market, trading stocks like Netflix and Amazon and Apple and FSLR and Goldman Sachs on the short side in the afternoon, because right when they usually would come back from lunch, this time they got to work and they sold things off. A little unclear where the options unraveling occurred this week. Usually because of options on Friday expiring, you get what we call an unraveling move that's on either Wednesday or Thursday. An unraveling move usually starts after the first hour's play. We definitely did not get it on Wednesday, but that's because of the Fed. On Thursday, however, this was the first hour or so, and if you mark from that point, we were dead flat for 3.5 hours until they came back from lunch. So that's not really unraveling. Maybe this is unraveling. Maybe it occurred right after the Fed opened their mouths. But a couple things to keep in mind here. Friday is triple expiration. That is the point where the market has the market participants will have the least protection, the least downside protection over the weekend here. So a lot of times the expiration day itself is flat. Might happen tomorrow, but we might also get obviously a continued sell-off as people start to worry a little bit after what happened over the last 2 days. We've got the technical setup for that. Either way, whether tomorrow's a sell-off or not, Monday morning we're walking into what I call the market being at the most risk possible. So a lot of the big crashes in the market occur following options expiration, and this is a triple expiration. Now, having said that, am I saying there's going to be a big crash on Monday? No, it doesn't have to be a big crash, but look at all the room that's left. If I slide you back to this S&P chart, look at all the room that's left here, just to kind of retrace some of this constant rally we've had since November. It goes back even further on the charts. If I zoom it like this, you can see, okay, we've got all the way back to 1340 just to get back to the beginning of this rally that started. So, anything back even in these low 1400s, there's a lot of support at 1460, if you recall. That was the breakout in January. Even anything back in there, that's from here still another 130 points or so on the S&P. It's a big pullback. And if that happens quickly, obviously, it's a lot of money opportunity for us to make on the short side, and then that gives us a nice chance to sort of reset and look for a rally again later in the year. But this has been the very critical turning point, and we've gotten exactly what we need finally. That's how we knew today was going to get ugly, and we stuck on the short side of the market because you're getting that confirmed, retested break of the uptrend line, and so now we'll be starting to look at that downtrend line that's going to be in place from this top to this top and heading lower. But don't be surprised if this accelerates, and even if you just get a big acceleration day either on Friday or Monday when that least protection is out there, that won't be shocking either. It sort of leaves the market in a fragile state. So we're going to be watching that on Friday. There is no economic data due. We're just going to be trading the markets as usual, and all this, of course, brought to you by eSignal 11 charts, which we use every day. Thanks.